The nation's most popular investment talk show is Mad Money.
Big fan of the show.
It's one guy talking stocks, droning on and on.
I'm as mad as hell, and I'm not going to take this anymore!
And it should make you mad, as in angry or crazy, because you need to hear from a variety of market sources.
Of course, the more the merrier!
You need to get a wide range of ideas. You need some balance. And you need to hear something different just to stay excited about investing in these wild times. This is MoneyLife Market Call. Different experts every day talking stocks, funds, and more.
You had me at hello, tier.
With experts telling you not just what they're buying and selling, but why. Who cares if it's not the most popular show?
Maybe you didn't have any friends.
It won't make you mad.
This is an outrage.
It will make you smart.
It's MoneyLife Market Call time here, and that means we get to chat with a money manager, find out what he's thinking about, well, the market in a broad sense, but also what he thinks in terms of here's what goes into my decisions and how you apply that to the market to find out what looks good and what looks not so good. And today, well, we're talking with Mark Yusko. He's the Chief Investment Officer at Morgan Creek Asset Management. He runs the Morgan Creek Funds. It's morgancreekfunds.com. Morgan Creek Global Tactical ETF, that's GTAA, and Morgan Creek Tactical Allocation, and more. Again, if you want more information, morgancreekfunds.com. And we have a link up to the Tactical Fund as well if you find Mark on our Money Life show upcoming and recent guest page. By the way, Mark is on Twitter. He's at Mark Yusko. But right now, he's on Money Life. Mark, welcome back to the show.
Thanks, Chuck. Always great to be with you, and look forward to our conversation.
Well, we're going to start with methodology because we always start there. But maybe my audience didn't hear the fact that when I was discussing the funds, the word tactical comes out, and you guys are tactical investors. Explain what it means and how you apply it in terms of your methodology.
Yeah, so, we believe there's four elements of managing capital, making money in the markets. The first is asset allocation. So where do you want to put your money? Stocks, bonds, commodities, or currencies. Then the second is manager selection. So who do you want to actually manage your assets in terms of those stocks, bonds, currencies, and commodities. Then there's portfolio construction, how much you give to each one. And then there's security selection. Ultimately, do they buy Ford or GM or, Galicia or Banco Macro? So the key is that we believe the biggest source of those returns comes from the asset allocation. And you can break asset allocation into two pieces. Strategic, so long-term, so that's like a 70-30 portfolio, 70% stocks, 30% bonds. But then we take it down a little further and say that there's tactical allocation, meaning that, let's say I had an all-weather portfolio, 25% stocks, 25% bonds, 25% currencies, 25% commodities, and then I wanted to be tactical and go 30% in one and 20% in the other, 26% in one, 24% in the other. And then within each asset class, we can also get tactical. So, within the U.S. equity market, there are 9 sectors, and we could say, all right, we're going to be neutral to the benchmark, and we're going to own the same weighting as all the sectors and have no tactical bets. Or we could say, hey, we really like healthcare, we really like technology, we really don't like materials and industrials. Those happen to be some of our views. And we'd be tactically overweight or underweight there. And then finally, you have geography. So, we may really, really like what's going on in a particular region, like emerging markets versus developed markets, or Europe versus Japan versus the U.S., or we may even get more granular and say, boy, we love what's going on in Argentina, but we really don't like what's going on in Venezuela or something like that. So lots of ways you can be tactical, but basically what it means is you're taking a movement away from a benchmark. Rebalancing is moving back to the benchmark. Mm-hmm. Tactical management is, moving away from the benchmark to try to capitalize on some edge that you have. One of the things I tweet about is edge, hashtag edge. And it could be an analytical edge, it could be an informational edge, it could be an expertise or experience edge, it could be a processing edge, anything that you think you can gain an edge in this business to then make that tactical move.
So as you look at the market now, and you talked a little bit about it, but where is the edge and where is the disadvantage, and how much movement do you need to make? Because we have a market that has been a little whipsawish. I mean, it's been, here's a day of good news, here's a day of bad news, here's a big swing one day, and here's a big swing in the other direction the next. So, you can sort of tactical yourself to death if you're not careful. So what are the tactics that you're taking, and how often are you making moves, and how much of what's going on is something that you want to look and take tactics on, and how much of it is the best tactic is ignore that noise?
No, it's a great point. And so let's start at the end and go back to the beginning. But, how often is too often? And clearly you can overthink this process. You can overtrade. And, one of the great investors or speculators, as they called him back then, was Jesse Livermore. And one of the things he said is, I made all my big money just from the sitting. So it's the sitting and waiting and fighting that urge to do something. One of my favorite lines is, go ahead.
In fact, that actually was our MoneyLife quote of the day, like about a week and a half ago. Was that
fantastic.
Quote from Jesse Livermore?
Yeah, absolutely. And the thing about it is some of the times the best advice is don't just do something, sit there. And so one tactic, right, is to say, all right, I'm going to have this all-weather portfolio, 25 stocks, 25 bonds, 25 currencies, 25 commodities, and I'm just going to rebalance every month or every quarter back to that 25% neutral weight. I'm not going to try to decipher, pick out all the signal from the noise. To me, that's one of the biggest challenges today is you ask, where do you get edge? And again, I tweet about this and I talk about that, edge is one of those things. There are a lot of different edges, but so much of it has changed. Back when the first Wall Street movie was done back in the 80s, edge was all about information access, getting information first in the movie, sometimes not such a legal way. But it was, could you get information faster? In the age of the Internet, we're drowning in information. I say we're starved for knowledge. So now the edge is synthesis and analysis. Do you have better analytical tools? Do you have the ability and experience and judgment to synthesize and to make decisions where you might want to move or change from that neutral weight? So when we look at markets, we start every year with a view of how we think the year is going to play out, and then we have a plan that we're going to move at the big levers, the big asset allocation levers. Once a quarter, I write these quarterly letters. My letter's actually going to come out this week. We'll probably talk about it. And then on a monthly basis, we'll do the micro stuff where we have to react to news or things like that. I think the biggest story this year in 2015, and we talked about it at the end of 2014 when we were together actually, is that the dollar is the biggest decision you've had to get right this year, because the dollar was so strong at the end of last year because of the threat of rising interest rates. Everybody came in to 2015 thinking, well, they ended QE in October of 2014, and they were definitely going to raise rates in January, and then they didn't. And then they were going to definitely raise rates in March, and they didn't. And they were going to definitely raise rates in June, and they didn't. And they were absolutely going to raise rates in September, and they didn't. And then now, Ms. Yellen, or a Queen Janet, as I like to call her, Q-E-E-E-N, is out there jawboning that, no, I really, really mean it this time. We're definitely going to do it in December. And I just don't think she's got it in her. I wrote a letter 2 years ago about the Great Pumpkin, and I talked about, is Queen Janet really capable of being Lucy Van Pelt, where, you pull the football away and make Charlie Brown land on his back. I just don't think she has it in her. I don't think the economy is strong enough for that. So the challenge you have is that over the last 4 years, really since 2011, the markets have not done anything without QE. So if an economy wasn't doing QE, Japan, U.S., Europe, then stocks didn't go up. If they were doing QE, stocks have gone up. So if you look since October of last year, we're essentially flattish, not up very much, really flat since March of this year. And there's just been no QE, and there's been no impetus to push stocks up. But as you point out, there's been a lot of volatility, which makes people nervous and makes them want to do something, when really kind of the best thing to do this year was to, pick a couple of big picture asset allocation ideas at the beginning of the year and then go on vacation.
Well, I need to get moving towards what comes through the whole process and what looks good to you now. So my audience has heard a lot about tactics and what they might do. What are some names that stand out to you right now?
Yeah, so we all year have really liked what's going on in Japan. In the developed world, we think Japan has got the best profits. So there are companies like the banks, SMFG and MTU. You've got Sony, which has just been on a tear, SNE. Every camera that most of us have in our phone uses an image sensor, and Sony has a lock on that market. And the new iPhone 7 is supposedly going to have 2 cameras, so they're going to sell twice as many sensors. So that's a good thing. So we love what's going on in Japan. Record profits, low multiples, great growth. We think Japan's going to outperform the U.S. for the next decade. Then you look at Europe. In Europe, there are a lot of cheap stocks, particularly in the PIGS, Portugal, Ireland, Italy, Greece, and Spain. And Greece is a place, we were early on this. We got it wrong earlier in the year. We missed that they would be forced into capital controls. But from the bottom on August 24th this year, Greece is one of the best performing markets in the world. And there are companies like Aegean Airlines and OPAP, which we think are extraordinary opportunities, very, very cheap. You look around into emerging markets, and everybody thinks, emerging markets are dead. Well, I got news for you. Russia's one of the best performing markets of the year. That was one of our big surprises coming into the year. Everybody thought, oil prices are down and their economy is going to fall off a cliff. And everybody underestimates Mr. Putin. The man has a 90+% approval rating. These people will go to war literally for this guy. And they have turned it around. Their economy has not gone down as much as people thought. And stocks are up over 20% in Russia this year. China is another place where everybody's wringing their hands about China. We see huge opportunities in China, incredible numbers of cheap stocks, great growth opportunities. Everybody's wringing their hands over whether growth is going to be 6.9% or 6.5%. It doesn't really matter. What matters is they're transitioning from industrial growth to consumer growth, and that's going to be a monster story for e-commerce companies like Alibaba and JD.com. And the Singles Day is coming up on 11/11. We think that's going to be a big positive surprise and going to boost those e-commerce stocks even more.
Well, that's a good idea of what you're looking at. Now we're going to find out how you feel about some stocks that my audience is particularly interested in.
Hold it.
You got to know when to hold up.
Or fold it.
Know when to fold up.
It's Hold It or Fold It time with my guest, Mark Yusko, Chief Investment Officer at Morgan Creek Asset Management. It's the Morgan Creek Global Tactical ETF, that's GTAA, the Morgan Creek Tactical Allocation Fund, MIGTX. For more information on what they do, go to morgancreekfunds.com and follow Mark on Twitter. He's at Mark Yusko. Now, hold it or fold it, you know how it works, so let's get straight to the action. We'll start with the request we got from Joe in Colorado Springs. He wants to know about CF Industries Holdings. It's ticker symbol CF.
Chuck, we think this is a strong buy. It's struggled a lot. The nitrogen fertilizer market has struggled this year, but we think they've made an acquisition that'll close at the end of the fourth quarter that's going to provide big revenue uplift in 2016. So this thing could do very, very well next year.
That would be a buy on CF Industries Holdings, ticker symbol CF. Joe in Colorado Springs had another request, this for Tata Motors, TTM.
We really like India. We talk about Modinomics. Everybody talks about Abenomics in Japan. We talk about Modinomics in India, and that's Modi as PM and Rajan as the head of the central bank. And we think these guys are managing their economy very well. There's huge growth, huge population growth, huge middle classification, and Tata is going to sell them all a bunch of cars. So that stock has also been hit a little bit this year in 2015. We think 2016 is going to be very bright for them, so it's a buy.
That's a buy on Tata Motors, TTM. Mark in Mitchell, South Dakota wants to know about Goldman Sachs, ticker symbol GS.
the challenge for the banks, and it's hard to say Goldman Sachs is a bank since they used to be an investment bank, but all the banks now are going to struggle, we think, in an environment where rates just aren't going to rise. I know Ms. Yellen's out there telling everyone she's going to raise rates in December. Don't believe it. We think this is a sell along with all of the financials that are banking on higher rates. We just don't think it's going to happen.
So in other words, if we had thrown another financial services firm like, say, a JP Morgan Chase, you would have been like, sell, because you just threw it out for all of them?
Exactly.
Okay, so again, it's a sell specifically on Goldman Sachs, GS. You could have added in JP Morgan Chase since he just confirmed it, JPM, but you could pretty much throw in any financial name. That was a sell. Next, for Luke in Allen, Texas, it's CBS Corp, Class B, the ticker CBS.
Media, since no one is watching television anymore, they're listening to great podcasts like this, has really suffered in the last year, but there are some assets out there that are really just too cheap, and we think CBS is one of them. So, we like to buy what's on sale. I'd say all the time that investing is the only business I know when things go on sale, everyone runs out of the store. So we think people need to stay in the store and buy CBS here.
That's a buy on CBS Corp. Trades under the ticker symbol CBS. And last, for Dave in Beaver Dams, New York, and Ning in New York City, it's Biogen, ticker symbol BIIB.
I struggle with this one because I could just list a whole group of biotech stocks, and they all fall under the same challenge right now as, Hillary's famous tweet. She's going to go after drug pricing and going to make it a campaign problem again, or campaign issue, just like in 1994, just like in 2008. I think nothing's going to happen long term because 6 of the 10 things she proposed require an act of Congress, and Congress is controlled by the right, and they're not going to do anything against the drug companies. So we think this is a hold in the short term. We think these are great companies, but they're going to be volatile in the short run because of this, pandering to get votes. But toward the middle of next year, we think they probably take off and there'll be buys again. But they're a hold right now.
So hold it if you got it, but don't buy more, waiting at least until we get a little more through the election process. On Biogen, ticker symbol BIIB. And unfortunately, we cannot hold on any longer to Mark Yusko because we've run out of time. But Mark, it's always great to chat with you. Thanks so much for taking time out to join me on the show.
Thanks for having me. Always good to be here. We'll talk to you soon.
Mark Yusko is Chief Investment Officer at Morgan Creek Asset Management. For more information, morgancreekfunds.com. Follow him on Twitter. He's at Mark Yusko. All right, we are just about done with the November 5th edition of Money Life. Did you catch the stocks in there that Mark talked about, that some other guests have talked about this week and last? And oh, by the way, Mark didn't completely agree. I'll fill you in when we wrap things up in just a moment.